we have the current stock market analysis for Broadcom Incorporated, stock ticker AVGO. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders will be able to find this information more easily on the platform. So as we can see here, we have the 4-hour price chart, and share prices are attempting to make a rally higher here after posting some fairly significant lows to the downside. This was one of the more interesting stocks in the market recently because we did see a strong earnings report coming from this company, but then in response, the market was not forgiving in any way. The market punished this stock. Really wasn't clear what the market would have been expecting in terms of outperformance based on expectations. And these share price movements to the top side have started to recover many of the losses that we're seeing previously. For the most part, some of these movements to the top side are really not surprising, given the fact that we did actually see a share price gap to the downside, and this is the type of scenario that would need to be. This price gap would need to be filled at some point. We couldn't just expect this really to remain open like this. Broadcom is a very commonly traded stock. There's a lot of money focused on this stock in the market as an AI play. And there's a huge number of buy and sell orders that are going to be parked right in this area. So when you see share price gaps to the downside like this, the expectation would be that share prices would eventually need to fill that gap at some point because there are still buy and sell orders that are going to be parked right in that area. You can't just simply skip over those orders and expect them to not be filled at some point. So this is what has happened here. And as we can see, this prior price gap has now been filled. In many cases, this is actually a very good way to add fuel or momentum to a stock if you start to see a share price gap like this. So in many instances, you will see people start to panic, and especially in this case, because the company actually released positive earnings. But in cases like this, you can see people start to panic because you might be thinking, well, what's going on here? The company reported positive earnings. Why would share prices be moving lower? But the positive aspect of a situation like this is that once you start to see that price gap filled, it's almost like gaining some free momentum, some free upside, because share prices will just continue until that price gap is filled, and then that can start to generate some momentum in the positive direction. So if we pull down to the indicator reading here, what we're still looking at is a broader climate of negative momentum. However, looks like it could be on the verge of changing here relatively soon. So what we would need to see in order to confirm that share price momentum to the downside has completed itself, has exhausted itself, we would need to see a break in the relative strength index, showing that this downtrend line is no longer valid. This would signal an end to the near-term bearish momentum that has been seen for this stock, and it does look like we could be on the verge of a movement like that relatively soon. Share prices did manage to bounce out of oversold territory down here and then break above the exponential moving average. This purple line at the bottom of the price chart is the relative strength index. The yellow line is the exponential moving average of the relative strength index. So if we start to see share prices roll over out of oversold territory and then break through the exponential moving average as well, this would then suggest that there is some good positive momentum that's starting to build for the stock. And then the next level or test that needs to be accomplished here would be for share prices to break above this downtrend line. So if we see all of those things occur, you can start to have a bit more of a positive outlook on this stock after this tremendous, even surprising move to the downside. So what type of damage has this price movement done? Because there is some damage that has been done to this chart at this point. So we will sort of drill in here a bit, take a closer look at this recent trend wave movement here. Because what we can see is that if we draw some Fibonacci analysis zones here, based on this price movement from 128.50 to the highs of 172.42, that would essentially be this price movement here. We can see that share prices did retrace most of that price move. We actually broke through the 78.6% Fibonacci retracement, which would be this sort of a light blue or teal colored zone here toward the bottom of the chart. We did actually break below there And we even saw some periodic closes below there too. We did see this candle, 4-hour price candle on September 6th, close below the 78.6% Fibonacci retracement. So this is a massive move lower. But it does look as though the market sort of regained its senses and realized that Broadcom's earnings were not negative. They did not disappoint expectations. They surpassed expectations. So it does look like buyers were starting to step into the market here. We did see some trading volume activity that confirmed these price movements to the top side. So there was a huge amount of momentum that was developing in the downside direction, largely fueled by this price gap to the downside. But it does look like investors were prepared to start to buy these dips because these trading volume bars here are larger than normal. We are seeing some price movements that are larger in size relative to what was being seen previously. They did not overcome this significant red trading bar here, but these are larger than the near-term averages. So we can say that there are rising trading volumes, even though we did not actually overcome this negative trading bar that was established during the Friday, September 6th trading session. So looking forward here, the next level to the top side that I would be watching comes in at roughly 163. We can even mark that in on this price chart here. So this would be the next level of resistance to watch here. This would be the price high that was posted during the August 30 trading session. So, there has been a fair amount of movement here to the top side, and we are relatively close to coming into overbought territory at this point because this price surge upward has been so strong. The positive aspect here is that we have broken above all of the major exponential moving averages, but at some point you're going to start to become overbought as well. So once that happens, it does look like we're going to be running into this 163 area right around the same time. So it wouldn't be surprising to see a bit of stalling there. I really don't expect to see prices just blow through that area. I think we probably will start to see some resistance at that point. But we're currently trading right around 158.30. So this does mean that we do have a little bit of distance here to travel further to the top side before we would start to expect to see some pullbacks to the downside. So here is the current stock market analysis for Broadcom Incorporated, stock ticker AVGO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.